us. I'd like to welcome Dipan Mehta, member, BSE and NSE. Dipan, thanks very much for joining us. You've seen moments like this in the past. The markets, of course, took a nosedive. What would you say at this stage?
So I think a new element of uncertainty has crept into our markets, and clearly this is not the end of this particular situation, because some response could be expected from the international community, from Pakistan as well. And it's an evolving situation, so difficult to call. But I think that foreign investors also will view this as an additional risk premium on Indian markets. Although growth is there, but then you have to deal with such situations and scenarios as well. And this what has been done today has not been done in the recent past. So is it going to be the norm going forward whenever there is a terrorist attack? There are many questions, I think, and these things have a way of just dragging on for weeks on end. So I wouldn't look at today's move, recovery which has come maybe last half an hour, 1 hour. Clearly, I think markets could drift lower. And what happened is that at every statement made, every press conference, every event, markets will react, positive or negative. And a new element of volatility also is coming into our markets, and the kind of secular upward move which we saw, certainly that has got vitiated. And one should be prepared for markets to correct even more. I mean, technically also a lot of important support levels have been broken, patterns have certainly got changed. And also I think FI numbers today, tomorrow will be very important. Because although it's a great thing from as an Indian citizen point of view, and we've been watching the media, and many citizens have come out and spoken in favor of the army, but foreigners may not share the same sentiment as Indians.
Right. So Dipan, there can be two situations here. Say if there is a buyer who was looking for a correction but wanted to buy. Now, that institution will also just get on sidelines that let things settle down even if prices are higher?
No, see, I think, you have to factor in that, you cannot just expect, what this situation does is it puts pressure on the P multiples. So if you're looking at buying a stock at an XP multiple, and these days P multiples are on the high side, they are expanded significantly. Because of an uncertainty, you have to now start lowering the PE premiums which you would be paying for the same businesses. And that's what clearly will happen. I don't think that earnings will get impacted in the short term or even the medium term. But what will get impacted is the price earning multiples. And how much they will get impacted is something very difficult to, gauge. All that we can say is that if you're an investor waiting in the sidelines to invest, then you just wait out this uncertain period. At some point, you will realize that the end has come. Markets itself will give that signal. Then perhaps, you may not get the exact bottom, but even 2-3% above the bottom, when you are convinced that the uncertainty is over, that is the right entry point. And for investors who are looking at, lightening their portfolio or leverage, people who have leverage positions, they should exit immediately,